Hi everyone, I am Joana Colussi from the Department of Agricultural and Consumer Economics at the University of Illinois. In today's video, we are exploring the growing agriculture trade relationship between Brazil and China. Right now, China accounts for about 1/3 of Brazil's agricultural exports. And as tensions between China and the United States continue to rise, Brazil's trade relationship with China is becoming even stronger. But could this growing dependence become a risk? Stay with us to find out, and don't forget to subscribe to the FarmDoc channel for more updates. China became Brazil's largest agricultural trading partner in 2013, 12 years after joining the World Trade Organization, the WTO. Over the past 2 decades, China's share of Brazilian agricultural exports has grown substantially, from 7% in 2005 to 30% in 2024. During the same period, the European Union's share dropped from 30% to 14%, while the United States' share declined from 14% to 7%. Today, China is Brazil's top buyer for many major agriculture products. In 2024, China accounted for 73% of Brazil's soybean exports, 46% of its beef, 33% of cotton, 29% of sugar, 19% of pork, and 11% of poultry. Among all these products, Brazil's biggest export dependence on China is in soybeans. This strong demand is pushed mainly by China's limited domestic soybean production and its need to support large-scale production of fish, meat, dairy, and eggs. In 2024, for example, China produced just 21 million tons of soybeans, while domestic consumption reached a record 129 million tons. Therefore, imports accounted for about 84% of the country's soybean supply, with 67% of those imports coming from Brazil. While China is the main destination for Brazilian egg exports, Chinese foreign direct investment in Brazil's agriculture sector has been limited over the past 2 decades. Between 2007 and 2023, China invested a total of $73 billion across over 260 projects in Brazil. However, most of this investment went to other sectors, like electricity and oil extraction. Agriculture, on the other hand, received just $2.4 billion, making up only 3% of China's total investment in Brazil. However, we know that agriculture, like other sectors, benefits indirectly from investments in infrastructure and electricity. Even though China relies heavily on imports to meet its domestic consumption, it's been working to diversify its supply sources and reduce dependence on Brazil. In recent years, China has taken big steps, like approving more GM crops, especially corn and soybeans, to increase domestic production and improve food security. The combination of potential growth in domestic grain production and a projected slowdown in demand from the feed industry is creating growing uncertainty in China's market, and for major suppliers that rely heavily on it, such as Brazil and the United States. In recent years, Brazilian agriculture sector has been exploring ways to reduce its dependence on commodity market exports to China. Some of the main strategies include boosting domestic crushing to produce more meal and oil and expanding production of biodiesel and sustainable aviation fuel. Brazil is also looking to grow its presence in emerging markets, particularly in parts of Southeast Asia, where rising incomes and population growth are expected to drive up demand for protein. For more insights on Brazil and China agriculture trade relationship, be sure to check out the full article on FarmDoc Daily. You can find the link in the description below. Thanks for watching, and don't forget to like this video and subscribe to our channel for more farmdoc updates. See you next time!